All right, so another short position this week on euro dollar. So let's break this trade down right here. So overall, what we've been looking on daily time frame, I think you guys remember, you can literally check the previous video where we broke down the weekly vision, daily vision. So overall, right here, what we've been expecting is for this quick short-term continuation deeper towards this daily time frame bullish imbalance high right here. Which regarding the daily stage, daily bias, we don't have one. We are just simply following the lower time frame direction, lower time frame order flow, and we are expecting for this possibly deeper pullback to take place towards the monthly BPR and ideally towards this daily time frame dealing ranges discount right here. So we in a way had the direction yesterday as well as today, but again, it is not something 100%. It wasn't one of those cases when we can trust it fully and everything's just perfect from daily time frame perspective. We were kind of neutral, but in a way still leaning towards short side just because we had few days in a row pushing to the downside and lower time frames are nicely aligning for a short position today as well. So now focusing on the lower time frames. So I will attach the analysis that we focused on this morning. So as you guys can see, what we wanted to see right after the New York midnight open, following this whole bearish delivery right here that we talked about in the previous breakdown, price forming strong structures and pushing away from them, forming strong structures and pushing away from them. So this is what we want to see continue right here. After the New York midnight open, what price did notice? They had lots of low resistance buy side liquidity right here that we could use as inducement. So that's just perfect type of combination. Then notice what happens. Price forms all of the sell side liquidity right here. Looking left, what we had was previous day sell side liquidity. So when price starts pushing higher, what we look at is if we have buy side liquidity to run and if we have clear bearish P race around that area. So as you can see from 1 hour perspective, we had these 2 consecutive upside candles as one bearish order block. So we focused on that as well as this bearish 1 hour fair value gap. So basically what we were looking for was for price to push higher. I also mentioned in the analysis that for those who are looking for a bit more aggressive type of trades, you can look for potential longs towards this area, towards the low of this bearish 1 hour fair value gap. So I saw that some of you guys took those longs as well. I personally didn't take anything on the long side and focused on the short side. So from 1 hour perspective, you can see what happened. Price nicely ran all the buy side liquidity, reached into the bearish fair value gap right here on the 1 hour time frame and started pushing to the downside. So overall, you can see where the position took place, us mainly focusing on the previous day sell side liquidity and the midpoint between these two targets as partial to final target being daily imbalances high, as we just talked about. So going to the 15-minute time frame, this is where a lot of things will start connecting for you guys. So notice that after the New York midnight open, price starts climbing higher but leaves all of this price action right here. So what this is low resistance sell side liquidity and exactly what we want to see on prices building buy side of the curve of this potential execution time frame market maker sell model fractal that we wanted to see. So what happens right here wasn't ideal because of one main reason is that a high of the day right here formed during London lunch between London Killzone and York Killzone. And ideally we wanted to see that high of the day form during London Killzone. So this is why it wasn't one of the classic sell days, but overall everything else was looking just perfect. Price rushes higher, runs Asia range buy side liquidity, leaves bearish SMT between these structures right here, reaches into the 1 hour bearish pizza raise that we were focusing on and starts dropping to the downside. So notice that it leaves this bearish fair value gap here on the 15 minutes, pushes higher, but at this point we are not looking for any short opportunities right from this fair value gap. We are still a bit careful because we still had some suspicions around this high right here, mainly because it formed in the middle of our kill zones. Another reason that it stopped very close from the 1 hour bearish order block. So when price does that, you guys know that very often we see those traps happen and price just gives a fake run and then continues pushing higher, tops out and only then drops. So we were careful of that. So what we wanted to see from 15-minute point of view and execution time frame point of view is to show clear signs of bearish order flow kicking in here on the 15-minute time frame as well as execution time frames, and exactly that happens. Notice that price reaches into this fair value gap right here and rejects it to the downside, taking out this lower here. So after that, once price starts pulling back, this is when on execution time frames we start looking for potential entries, looking for near kill zone continuation. So let's now drop to the execution time frames. This is how our charts looked like. You can also copy and paste this 1 hour fair value gap right here for everything to be even more clear for you guys. So now notice that price during the long kill zone was clearly building and accumulating liquidity right here as it was building this buy side of the curve of this execution time frame sell model. So it runs higher right into that 1 hour bearish lower time frame pizza race, tops out right here, then eventually sharply takes this structure right here. But again, they stayed patient. I now will attach the execution time frame term analysis and what we looked for right here. So notice that we focused exactly on this 5-minute DPR right here. We wanted for price to reach into the OT levels of this first expansion, which is this E1 right here, first expansion, giving shift and delivery. Then price pulls back because of all the negatives. We were not looking for entry right here. We waited for more. So what we waited for was second expansion, E2. Inside of the second expansion, notice that it leaves very clear bearish fair value gap. Price reaches into it. At this point, as price revisited the low of this fair value gap, this entry right here on this candle would have been valid as well, but I personally just waited for a little bit more. Price rushed nicely, reached the equilibrium right here of this execution time frame range right here. We had this bearish 5-minute fair value gap right in the middle, so price rushes into it, starts reacting to the downside, and this is where I manually entered the position, putting my stop loss above bodies of these candles right here, covering this the whole entire high of this second expansion. And after that, you can see that price was messing around for some time right here, not pushing towards our targets right away. So obviously that's not perfect. This is when position just plays with our head a little bit, but overall we followed the analysis, we followed our system, we waited for price to start going. So notice that price revisits this fair value gap one more time, and then it revisits for the third time, and then it drops. So what we do, as the original consolidation of this execution time frame sell model was very close from one of our main targets, which was previous day sell side liquidity, we didn't take anything at this point right here. We waited for price to reach into the previous day sell side liquidity. As it did, this is where I personally closed just 25% of my position, moved stop loss to break even right here, and then was waiting for price to reach into my key 2, partial 2 area, which was the midpoint from previous day sell side liquidity to final target right here. So as price reached into T2 level right here, this is where I closed 65% of the position, leaving only 10% of the entire position one, so just a small amount. And unfortunately, you guys can see that price came very close. It was literally 1.1 dips away from our final target. But again, I personally follow my system. I don't do any manual, emotional type of closes and stuff like that. So I just left the position that remaining 10% run. And as you guys can see, it pulled all the way back towards our stop loss right here. So that was it regarding this trade. Most of the bags were secured, and that's as always power of taking partials at key critical points. One thing that I also want to mention, and something that I will make a whole lesson about, is paying attention to sensitive fair value gaps that usually form, then let's say we are talking about a market maker sell model, that form inside of the buy side of the curve. So the area that I was also looking at after price gave this rejection to the upside, I wasn't looking at it too much, but then notice that price gave all of these rejections right here, causing this pullback. So after that, I was paying attention to this level, and what I wanted to see is price drop lower and revisit it. So notice how nicely price pushes higher and then uses this level as resistance. It used it as so-called support right here, then it breaks lower, pulls back right into it, uses it as resistance, and then drops towards our targets. So always pay attention to imbalance points that price rejects for a few times. These are the ones that stay sensitive for quite a while. So that is all regarding this trade breakdown. I hope you enjoyed it, and we will talk very soon.